QuickBooks Pro Desktop 2021 tax line mapping. Enter account balance data into QuickBooks that will then be used to line up and export to tax software. That tax software for us being Lacerte, owned by Intuit, the same owners of QuickBooks. Let's get into it with Intuit's QuickBooks Pro Desktop 2021. Here we are in our S-Corp test file. We currently have the open windows open. You can open the open windows by going to the view dropdown, selecting the open windows list. We've been putting together the chart of accounts, and we've been putting together each line item so we can take a look at what the mapping will look like when we think about how it will map over to the tax return, so that we can then export it directly from QuickBooks into the tax software. Our tax software we're testing out with being Lacerte, owned by Intuit, the same owners of QuickBooks. And so we're thinking about how it's going to map over here to the Lacerte tax software so we can save some data input time. In a prior presentation, we've been taking our information from this trial balance, just entering that information into the system so that we have something to export, and practicing setting up these accounts to see what the tax mapping line items would look like. We're going to continue entering the data for the income statement, then adjust the equity section, and then we'll just basically check our numbers. Now, if you just want to go with the data input file and export it, or practice or look at what the exporting would look like, we will provide a backup file of the QuickBooks file with the numbers in it, so that you can then use that to export to a tax software of your choice to test it out. But we're going to practice entering the data here, which means now we're going to enter the income statement line items with a journal entry. So if I go back to QuickBooks, we're going to be opening up the trial balance. If I go to the reports dropdown and go to the accounting and taxes, take a look at the good old TB, the trial balance, changing the dates up top from 01/01/19 to 12/31/19. That's the period we've been entering this data. We entered the balance sheet data in place. We need to adjust the opening balance. We're going to enter the entire income statement with just one journal entry. We'll just enter the journal entry for the entire thing, put the balance to opening balance equity, and then we'll adjust opening balance equity to the proper accounts, including possibly just simply retained earnings account at the end. So let's do this. So this whole income statement, we're just going to enter in with basic journal entry, or that's what we will attempt to do. Now we have all the accounts set up already. We've yellowified them to indicate that they are set up. So we should just be able to enter this as just basically one big journal entry. So let's do that. So we're going to go back on over and say we want to go to the company dropdown. We'll take a look at the make journal entry. We're going to enter this once again as of 01/01/19. And the accounts that we're going to have here, we're going to say, all right, the first one's going to be sales, 990000. So sales, that's going to be a credit account to increase it. So sales is credit 990000. And just moving on to the next one, we've got then returns and allowances. So returns and allowances, that'll be a debit because it's a contra income account. And that'd be for the 10,000, so it's 10,000. And then I should be yellowifying or greenifying these as we go, so I don't get off track or anything. I'll still kind of mess up possibly but no. Anyways, we're gonna greenify them. And then we're gonna go to the cost of goods sold. So cost of goods sold, and that one is gonna be for then the 100,000. So we'll pick this one up at 100,000. Next, let's greenify that one. Greenify dividend income, other income type of account, credit side of things. So we're going to say dividend income, credit side for 14,000. And then I think it was interest income, credit side of things for 6,000. And then let's go back over, let's greenify, so we don't get too out of whack. We don't need it. This one has a zero balance, so I'm going to greenify that one. Greenify. And then compensation. Compensation is going to be for a debit this time because it's an expense, 700,000. So 700,000. And then let's greenify these two because the second one's a zero balance. So I'll greenify that one. Greenify bad debt and then meals. So I'm just going to say bad debt, and then the next one is meals, and then let's add those two balances if I can remember them both. 10,000 and 10 and 4, 10 4. That's easy to remember. 10 4. Roger that. 4. And then the next one is going to be, let's greenify those two. And then we've got maintenance and business interest. So I'll put the accounts in first, maintenance, and then business interest. And then let's go ahead and enter the amounts for them if I can remember them both. 9,000 and 1,005. So 9,000 and 1,005. And then the next one, if we greenify those two, is property taxes and charitable contributions. All right, so we're going to say property taxes, property taxes, and then charitable contributions. Let's take a look at those numeros. 8,000 and 8,000. That's easy to remember. 8 and 8. 8,000, 8 and 8, and then we're out. 8 and 8 now. 8, 8 out. Oh, that's too many zeros, though. 8000. All right, and then we'll greenify that one. Greenify, and then we got office supplies and rent. So we'll say office supplies and rent. Oh, I misspelled rent. That's difficult to do, but I did it because I have talent, skills, mad skills. 15,000 and 16,000. So we're going to say 15,000 and 16,000 for those two. And then greenify. And then we have advertising and legal service. So advertising, legal service. And then we'll pick up the balances there. 5 and 5. That's easy to remember. 5 and 5. 50-50. 5,000, 5,000. Greenify. Next we have, I'm going to do 3 at a time this time. Employee benefits, telephone, and miscellaneous. So employee benefits, telephone, miscellaneous. 3 accounts remembered in one shot. 7,000, 2, 5, and 9. 7,000, 2, 5, and 9. Look at those memorizational skills. Okay, so then if I tab on the next one, you would think that the plug will show up, which would be net income, hopefully. 100,000. That's what we need to plug this thing up. And so that is what our net income is. So if I greenify these, then if we go down, net income is the 100,000. So that's the plug, because if I highlight this whole thing, it adds up to 100,000. So that's good. Debits minus the credits, 100,000. I'm just going to put that into the opening balance, as has been our tradition, and then we'll fix the equity section. So I'm just going to put that to opening balance, equity, save it and close it, por favor. And then we're going to go back on over to the trial balance. And so there we have it. So that looks good, I think. And then, but the only difference, the only change we need to make is this opening balance has the 287,408. So that 287,408, we don't want it to be an opening balance, a plug. That's the only thing that we need to fix. But we want it to go to retained earnings. That's because opening balance is a made-up account. Retained earnings is the real account. So now we're going to adjust that. I'm just going to take it out of opening balance, put it to retained earnings. So then we could do that with a journal entry. I can go company drop down, make a journal entry. And I'm going to say that this then needs to come out of opening balance equity for the amount of, let's just check it on this trial balance. It's going to be for the 287,408. So 287,408, and we're going to put it into the retaining of the earnings. The retaining of the earnings, and otherwise known as retained earnings. And then we're going to save and close. And yes, we're recording the retained earnings, but we know what we're doing. And there we have it. So I think this line then, hopefully if I do a side-by-side comparison from here to like there and closing this out, let's just check it out and admire our work. So there's 110, that looks good, 50,000 is there. It's a little out of order, that's okay, because it's in alphabetical order so that's fine. So the 100,000 here, the 19 there, the 23 there, the 70 there, 16, 100,000, that looks good, equity's good, that's a good indication. 119, there's the advertising, that looks good. And then the 100, the 100 is there. And then these are going to be out of order because they're in order by alphabetical order in the expenses. Let's just check the net income and call it good. So I'm going to go to the reports drop down, company and financial, and say profit and loss, P&L, date range 01/01/19 to 12/31/19, and we have the 100,000 down here. That ties out to what we have here. So I'm going to call it good. It's good. Done. Called. So now I'm going to save it. I'm going to save it as a backup file too. So if you just want to start from this, then I'll give you the backup file and you can try to export it with us. So our next step then, as we have this profit and loss, is to export it to the tax software and see what it does, see if it lines up, and then kind of concentrate on those kind of factors that are more of a problem for us. And those are going to be things like if I unhide these cells. Adjustments, if we have any adjusting entries, like depreciation is often an issue, and then tax adjustments that might be like Schedule M1 adjustments or Schedule K adjustments. So we'll take a look at that in future presentations.